Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bullish white soldier yesterday, but coming as it did after the previous session's indecisive doji cross and the prior bearish black crow pattern, well, together they make up a 3-day bullish morning doji star pattern. Why? Might you ask, did this happen? Well, a good question, which I can easily answer. As I've pointed out for a number of sessions now, we have dropped down to test the middle time, currently at 113.11 of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's action and drops by about 5 ticks a day. This is the prime reason we have created such a 3-day bullish pattern. Interestingly, the neckline, currently at 112.69 of the April to May 2020 reverse head and shoulders pattern, also assisted in this, especially on the day the market created the indecisive doji cross. The question now is whether the market will follow on higher from this 3-day bullish pattern or deconstruct it. Finally, just a reminder that all this comes in the shadow of September's monthly key reversal down. Now, so far today, a reactionary start with a strong move back down towards the middle time and looking like a big bearish double right now, but it is still early yet. Cable, aka sterling against the US dollar. A higher but still indecisive spinning top yesterday. A not altogether ideal follow on to the previous session's unexpected and I suspect significant key reversal up. What seems to have happened is that the follow on higher has gotten itself entangled in between and around the September 2020 high at 134.83 and especially the 2019 high at 135.16. Overall, we are still in between the middle time below, currently 132.25, and the upper time above, currently 135.69 of the early September to late October bearish Andrews pitchfork, though obviously more towards the upper end of the pattern. We are also quite a way below the broken July to date sideways triangle for which we have and had targets down here. The initial target X in the 134.90 area has already been achieved twice, whilst the secondary target X1 in the 132.65 area, well, that looks a long way out of reach right now. I'm now thinking of retiring these two targets as the market seems to have done enough, even if target X1 has not been achieved. I reckon I'll review again after this weekend. Now, a couple of final points. I've droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down and the last 2 weeks action revitalized this idea enough that I'd mention again the targets I had originally placed below. That's an initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. Last Friday saw target X2, the initial target for the pattern, reached. As you can imagine, target X3, the secondary target, is much harder to achieve, and I might also review this target for possible retirement after this weekend. Now, so far today, initially not much, with a slightly higher open, and there was support still below from the September high, whilst above we had that 2019 high at 135.16. However, the market has decided to actually try and form a bearish engulfing pattern right now, and so, which isn't really not that hard to do considering yesterday was an indecisive spinning top. Well, we're on the verge of forming that. We've moved down quite considerably and we're staying into resistance around about the 134.20 to 10 area. There is some support around that area. There is some, but it's not very strong at the moment. I'd just like to remind you that the upper time is inching down into the frame. By the middle of next week, it will be down amongst the current levels. Euro sterling. A reactionary bullish piercing line pattern yesterday that may have even set up the opportunity for a possible pipe bottom, but we'll have to see on that yet. The market moved higher but was slowed down within some recent congestion between 84.20 to 84.30 before finally halting. Below, we still have the new-ish lower trend line, currently 83.86 of the reincarnated June to date expanding broadening wedge pattern. As I've said recently, I've had some doubts about this whole idea right now, and this was a good test of this wedge pattern. Now, a little below this trend line, we have another support line, one that proved to be quite good back in October. It is the old upper channel line from the broken bear channel originating from May, currently at 83.73. Meanwhile on top, well, the next significant resistance seems to be the April low, 84.70. So far today, a counter reactionary move lower, looking like an immediate countering bearish harami, though it is early yet. One other item is if this does turn out to be counter reactionary, well, it would convert what looks right now like a 2-day pipe bottom into a 3-day bearish stick sandwich pattern. Now, stick sandwich patterns are interesting. That is because tradition indicates they are bullish reversal patterns. However, the data is different. It indicates that something like 6 to 7 times out of 10 the pattern is a bearish continuation pattern. So it'll be interesting to see if the market follows tradition or the data. US dollar against the Indian rupee. A second bearish black crow yesterday and a follow-on lower of sorts to the previous session's, well, let's be honest, uninspiring immediate countering key reversal down and bearish engulfing pattern. Now, that original move had been prompted by the squishing of the market in between the strong overhead early October to date downtrend, currently 74.43, with the 50% Fibonacci line of the April 2020 to February 2021 move just above that at 74.63. Meanwhile, below we had the well-publicized quartet combination of the short-medium moving average, currently at 74.38, the 50% Fibonacci line of February to April 2020 move at 74.26, the medium moving average, currently 74.29, and finally the broken downtrend and trendline combination of the April 2021 to date move, currently at 74.27. This quartet of supports had previously been seen late 2 weeks ago, trying to hold the market up and failing. Well, they failed again 2 days ago, and we now can regard them as resistances. The drop yesterday was muted as prices showed a marked aversion to venturing down to test the slowly rising long moving average below, currently at 73.88. Indeed, for a fair portion of the day, I thought the market was going to pull up further and create an indecisive spinning top. However, in the end, it didn't. Now, so far today, a slightly higher opening and some residual aversion to the long moving average below is still evident. However, the quartet of overhead resistance has effectively capped the market so far, but it is being tested. US dollar against the Brazilian real. A fall for bullish white soldier yesterday and a continuing follow-on higher from last Friday's immediate countering bullish harami. It was the second consecutive close back up over the middle time, currently at 550.61 of the late July to late August bullish shift pitchfork. This pitchfork continues overall to provide a reasonable indicator of the current bullish angle of attack. Below we have some interesting supports, the not so good short medium moving average, currently at 545.01, and the two adjacent 50% Fibonacci lines, the May to June move at 539.28 and the whole of 2021 so far at 538.46. Finally, below all these is the ever so slowly rising long moving average, currently 536.39. Now, the reason I've mentioned all this support is to specifically get to this long moving average, as just below it we have the rising medium moving average, currently 534.20, which may, as soon as the middle of next week, possibly make a golden cross of the long moving average. Yet please remember this, as I've recently repeatedly stated, all this is in the shadow of the weekly key reversal down from 2 weeks ago. US dollar against the Mexican peso. An immediate countering key reversal up and bullish engulfing pattern yesterday. This counters the previous session's bearish dark cloud cover pattern type, which had until yesterday capped the small rise we saw this week. Yesterday saw the market bracketed by two Fibonacci levels, below by the 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.60.62, with no doubt some help from the 50% Fibonacci line for 2021 so far at 20.58.49. Meanwhile, above, the market has again been capped by the interesting 38.2% Fibonacci line, the big 2018 to 2020 move at 20.90.39. This Fibonacci line had capped the rise much as it has done in early November and early October. The resultant key reversal up is very interesting, coming as it does so close to the overhead Fibonacci line, suggesting a possible test of it today. Stepping back for a bit, the action since late September to date has elements of a diamond pattern, but it just isn't that well defined to call it such. This requires some more thinking and pondering. Anyway, we still have at least for the moment, on the top side, targets for the recent broken June to September descending triangle. Now the primary target for which is in the 2089.20 area and has already been achieved, though there seems to be a diminishing chance of success of achieving the secondary target, target X1, in the 21.23.5 area. All these recent actions should be seen in the shadow of the weekly key reversal up made 3 weeks ago. So far today, a slightly higher open, followed by a dip and then a recovery to around unchanged on the open, and looking like a possible indecisive doji cross or spinning top, but more maybe even a hammer pattern or hanging man. More hanging man, I would think. Though still there's plenty of time. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.